All right. Hey, thanks for being here. Today I'm going to be talking about why I'm crazy. About oil tankers. On the left-hand side here, I have a picture of the sinking ship, an oil tanker, I might add. And the reason I put this here is because I believe it's indicative. So, if you don't know, oil tankers and probably oil in general, at least at this time, they're not very popular. They don't attract many people, I suppose, and the sentiment in these industries is very poor, and perhaps for good reason. But I think a little bit differently, I suppose. On the right-hand side, there's a graph, and the reason I put this here is because I think this is also representative. We'll call this typical tanker company, and I'll talk a little bit more about this later. If you look at any random oil tanker stock, you may notice a graph that looks very similar to this. And if you're the average investor and you see something like this, you're probably going to think to yourself, this is uninvestable. Why on God's green earth would I ever invest in something like this? And, well, I tend to a little bit, like I said, I tend to think a little bit differently. Yeah? And the reason for that is because I think I am a contrarian. Okay, so in this photograph, you might imagine me as the black sheep, and the rest of investors or people in general, they might be the white sheep. Now, in this photograph, they're all going off a cliff. Maybe, but maybe in real life, I'm not that arrogant. Maybe in real life they're all right, and I'm wrong. So one of the things you notice about the herd, I suppose we'll call them, of investors, is lately they tend to be getting into electric car stocks, EV in general, solar, anything that develops kind of clean energy, regardless of the fundamentals of that company involved, they pile into it, right? And those are, stocks like your Teslas, your Workhorse, your Nikola's. And to be fair, some of these companies do have strong fundamentals, but many do not, yeah? And there's all kinds of EV stocks in general, right? Me, I don't tend to follow the herd. I try to think of things differently, and I've spent some time understanding oil and shipping and oil shipping, and I see some tremendous value in these companies that I think many people do not, and that's, again, the purpose of this video. So in line with that kind of contrarian thinking, I think the average person looks at this graph and they think to themselves, I'm not going to waste my time. This is uninvestable, right? But to me, I think to myself, well, why were stock prices so high here? And what happened? And why are they so low now? And after doing research and I think understanding the industry a little better, I may have cracked the code. All right. So what I've discovered is that, like many industries, well, shipping, it's largely, and oil tankers in general, especially, right? Well, the main driving force is supply and demand. And when I'm talking about supply and demand, I'm not specifically talking about oil. That does matter. But I'm talking more about the supply and demand of ships, oil tanker ships specifically, right? So if there's not enough ships, or like on that right-hand side, for example, the left-hand side, if there's too little supply, well, those ships, they make a lot of money. So they are able to negotiate higher prices because, well, oil needs to get delivered. And that's kind of how I think about ships and shipping in general. They're kind of your delivery guys, right? But instead of delivering pizza, well, they're delivering this black viscous liquid, otherwise known as oil, yeah? So when there's not enough ships to deliver a fixed amount of deliveries, because the deliveries, they don't change that much. It's all based on supply and demand of that oil, right? And yeah, there's fluctuations, but mostly it depends on the rates that these shippers can charge is based on, how many ships there are, how much competition there is. So if there's not enough ships to deliver a fixed amount of cargo, well, those shippers, they have tremendous negotiating power. They can get that fat stack of money. They can get that whole pile. They can charge basically whatever the heck they want within reason, right? But when there's competition and there's too many ships to deliver that fixed supply of deliveries, they don't have that leverage anymore. They can't negotiate. They don't have, the ball is not in their court. They're at the whim of the person chartering them, the person that needs that oil delivered. So they can, with that, they can go to different shipping companies. What ends up happening is they're going to underbid each other. They're going to undercut each other, and eventually they're going to do it to a point where nobody's making any money. Okay, and the reason for that, there's not a lot of differentiation in shipping companies. They're all just big old boxes of iron that, they move stuff around. There's not that much of a difference between any individual company. So they don't have any leverage on each other. Another thing about shipping is that it's a long cyclical industry. And so what I mean about cyclical is, hopefully I can demonstrate that through this graph, right? So essentially we could start and we could say, well, there's a peak in the industry. Well, eventually times get shitty, they get tough. And then eventually, because they get shitty and because they get tough, eventually they get great again. And so hopefully I can explain this a little bit, yeah? So we saw these graphs, maybe before, right? I'll talk a little bit more about this, but I would ascend, what I've discovered, what I believe is that this right here, these times in the late 2000s, when you see many of these shipping companies with these high stock prices, well, they were actually at a peak, all right? And so what I mean by them being at a peak is that there was too little supply of ships. They were making amazing amounts of money, okay? And sentiment was amazing. It's the opposite of what it is today. They were making tremendous amounts of money. But what ends up happening is these shippers, well, they end up shooting themselves in the foot. So while they're making tremendous amounts of money, investors are piling into their stocks, right? Banks are willing to lend them tons of money because the shipping's making so much money. And private equity is willing to get in there as well, yeah? And with all of these things, with all of this money flying around, well, what do shippers do? Well, they think like a shipper. What do? They buy boats. They buy ships. And eventually they begin to realize, as they get into this, I guess, recession phase, they begin to realize that, oh, damn, we built too many ships. And times get even worse. And eventually we get to a point where banks aren't willing to lend money anymore. Investors aren't willing to get involved, and neither is private equity. Yeah. And cycles tend to take a long time. And this is because ships last a long time, right? The average oil tanker can last 20, 25 years, yeah? Now, after about 20 years, that's when shipping companies tend to scrap these ships because the costs and the risk involved with transporting oil after a certain point, it becomes, they just get rid of the ship. It's not worth it, yeah? So, but what ends up happening? Well, no more people are involved. No investors want to get in. They can't generate any money. Well, now that those ships are getting destroyed, now we're getting to a point where they're starting to get too little supply of ships again. And we start turning it around, yeah? So that becomes a recovery phase. Sentiment shifts a little bit. People start to think, wow, shipping is actually a good investment. Maybe we should get involved in this. And you kind of know how this plays out. We get to another peak, and people that have been around the whole time, they tell themselves, well, I guess here we go again. Huh? So this is what I think, okay? And like I said, the average ship lasts about 20 years, yeah? So after doing some research and looking at these stock prices, well, in the late 2000s, 2008, 9, around there, 2007, we were at what I think is the peak. Eventually, there was so much money. These shippers built ships. Well, they built too many. And in the mid 2000s, we got into a recession. You'll notice there's a small blip here. And this has to do with, there's kind of like an oil supply glut. But like I said, that does matter. But the main driving force is the amount of ships. Okay. And eventually that oil glut ended. And then we got over here where we are now. Okay. What I believe is the trough phase, right? This is where we see sentiment is shitty. People think this is uninvestable. And one of the ways I've noticed this sentiment, especially, I go to read forums, I go read some public opinions and what people say and talk about shipping. And you'll notice there's a common sentiment in that people don't see it as a long-term investment. There's a lot of traders, they say, hey, we could get in this shipping, something might happen, there might be an oil supply glut, there might be contango coming up. We could get into this trade for a very short period of time because we know it's uninvestable for long term. But we'll get into it for a short time. So you'll see this a lot, this kind of a concept, this mindset, I guess we'll call it. And I think that's a lot because they don't understand all of this stuff that I'm talking about. So I think we're in a trough where that sentiment is pure shit. And I think this is where we're going next, into that recovery phase, okay? And this is how I kind of know this, okay? Here is a graph, or I guess a bar chart, we'll call it. We're talking about VLCCs. VLCCs are very large crude carriers. It's a type of tanker. And if you don't know, there are all kinds of tanker types. Basically, they revolve around the size of the amount of oil they deliver, right? This VLCC is it delivers 2 million barrels. I guess there's an ultra large crude carrier, but you can think of this as the largest oil delivery vessel that there is. But this chart that you're looking at here, it's very similar across all of the oil tanker types of ships. So you'll notice in 2005, 2006, not that great. There's not that many ships being built. But then you'll notice around here, 2007, 2008, 2009, there's more and more and more ships being built. Why is that? Because times were great. There wasn't enough ships to deliver a finite amount of deliveries. So what did they do? Those shippers, they were shooting themselves in the foot. They were ordering tons and tons and tons of boats. And eventually they got to this peak. And there's a little bit of a lag here. So you notice it's going to 2011. Around 2009 was where there was about peak minute order. It takes a few years to deliver these ships, yeah. Then eventually you'll notice there's not as many orders. These shippers are losing money. Equity investors are starting to get out. They're like, man, they're losing money. We need to get out. And then 2015, well, there's a drop. Now, it did pick up again. You noticed again, as soon as there was a little bit of a supply increase in the amount of oil on water caused by that supply glut, they started building ships again. But where are we now? Well, they're not ordering a lot of ships. And there's a bunch of reasons for this. I guess I'll talk about that some other time, right? But essentially, when times are good, tons of ships are being built. Banks lend money, investors, wow, we got to get in there. Rates are amazing. But then there's too many ships. They're forced to compete with each other. Times get shitty. And then what you'll notice is that towards the end of these cycles, a lot of the businesses tend to consolidate. So all of the weaker companies, well, they get gobbled up by the better companies. And we're starting to see that in the industry as well. Anyway, So we get to this point where we are, and this has changed a little bit since this was this graph, since there has been a little bit of orders, but essentially since this graph was created. But essentially this is represented, it's still representative of current conditions. Okay. The VLCC order book age. This is another thing that I think is very relevant. Okay, this is produced by URNAV. One thing to keep in mind, this is a tanker company, so make of that what you will. Again, in 2005, let me just explain this. So the red line is the average age of the tanker fleet. So the average age went from about 8.5, peaked at about 9, went to a trough of 7.5, and then now we're at an all-time high of about 9.5 years, okay? And the blue line represents the order book. So it's the amount of ships that companies are ordering, right? We went from over here, 10% of the fleet, up to 50% of the fleet was on the order book compared to the amount of ships on the water. Eventually dropped to 10%, went up to about 20%, again in that supply glut, and then now we're at all-time lows. So you're noticing there's a gigantic discrepancy. We'll call them, I guess this is kind of like an alligator jaw, right? And what I believe is eventually this alligator jaw on this right-hand side that we're seeing, it has to snap shut. And the reason and the way that it's going to snap shut is through high rates. So what you note, the main takeaway from this graph to notice is that we have an extremely old fleet with no ship, essentially very few ships being built to replace it. And remember, over here in the 2006, 2007, 2008, in the coming years, these ships are going to be cutting close to the scrapping ages, yeah? And before this, right, as well. All of these ships are going to be being scrapped, and there's not a lot of ships coming in to replace those ships. So what is that going to lead to? Again, it's going to lead to not enough ships. And it takes a few years to replace all of those ships. So what do I see when I see this graph? I see an opportunity is what I see, okay? Another way that we can tell that we're getting close to this reversion, I guess we'll call it, is that last year there was an event called we'll call it the Costco Sanctions. So I'm not going to get into politics, but essentially there's a shipping company called Costco, and they have a lot of oil delivery ships, oil tankers. Now they got sanctioned by the United States, and many articles that I read, they estimate that about 5%, roughly 5% of the fleet got removed. They were not allowed to do business anymore. And what happened, if we look at this graph on the bottom, we can see the light blue line is 2018, rates sucked. 2019, towards the end of the year, around September, those Costco sanctions went into effect. When they removed 5% of the fleet, the rates shot up significantly, okay? So what that tells us is that if 5% of the fleet is removed, these shippers are going to make tremendous amounts of money, yeah? Now, eventually those Costco sanctions were removed, and you'll notice right after that, what happened when those 5% of ships re-engaged into the fleet? Shipping rates, well, they sucked again, okay? But when we do know, with this huge gap between the age of the fleet and how many ships are being built, that this 5%, where we need to get to, this reduction above 5%, we're very close to that. We're going to start to see scrapping very soon in these depressed rates. And that 5% indicator tells us that we are very, very close to a bull cycle in the cyclical industry. Yeah. Okay. So how I think this plays out based on the evidence and based on my research. as you know, we are in what I would consider to be a global depression, right? We are going to see many many people think this is a shift in oil in general. I don't necessarily agree with that. Like I said, uh, I think oil is still a tremendously valuable resource, and it will continue to be for quite some time. Uh, but what I do see is in the coming probably year or two is that there's going to be a uh, there's still going to be depressed rates because we're not at that 5% reduction in the fleet yet, and where I need to. And at the same time, we have diminished demand because of coronavirus and COVID. Yeah, so in order for this to turn around, it's going to take time. There is a supply. Uh, there's an excess supply of oil available caused by the shutdowns in March, and there probably is supply increase relative to demand for a while because we're still seeing probably what looks to be like a global depression, as well as some continued shutdowns around the world. Yeah, that'll drive demand down, but eventually these depressed rates are going to cause ships to be scrapped. And when you see this depression end, this global, you see coronavirus go away, and you see oil demand resume. What I believe you're going to see the ships are scrapped. We're going to get below 5% reduction in the fleet, and at the same time, you're going to see demand increase in oil, and that is the beginning of an oil bull cycle. And what I think is going to happen is that those stock prices that were up to 110, 120, 150, well, I think they're going to get there again. There's going to be a shift in the industry. There's going to be capital coming in. There's going to be investors piling in. And what I'm going to do at that point is sell happily. I will sell my positions. Those happy investors can have it. And eventually, well, those shippers are going to do what they're going to do. They're going to build too many ships, and we will continue in the cycles again. Thank you for watching.